Robert Kiyosaki, the author of the widely acclaimed book, Rich Dad, Poor Dad, is a renowned entrepreneur, educator, and investor who has transformed the way millions of people worldwide think about money. He believes that the world needs more unconventional entrepreneurs with unique perspectives on money and investing, and has become a vocal advocate for financial education. At the Vancouver Resource Investment Conference, Robert Kiyosaki gave a speech that included a strong warning about the world's economy and the fall of America as a global superpower. He urged investors to consider alternative investments such as gold, silver, and Bitcoin as a hedge against inflation. He also discussed his views on investing in commodities like cattle, stocks, and bonds, and talked about the potential impact of baby boomer retirement on 401k. In this video, we will explore Robert Kiyosaki's insights on various matters, including the global economy, fiat currencies, the war in Ukraine, and how Joe Biden's energy policies have played a significant role in inflation. As the #1 financial author, Robert's perspective is both valuable and informative. Robert Kiyosaki's warnings about the global economy and the fall of America as a superpower are rooted in his belief that the current economic system is unsustainable. He argues that the world's economies are based on a debt-based monetary system that is inherently flawed and vulnerable to collapse. In his view, the current system is propped up by governments and central banks, who are constantly printing more money to keep the system afloat. According to Kiyosaki, the United States is facing a potential collapse of the dollar because of this debt-based monetary system. He believes that the dollar is losing value and that inflation is on the rise, which will ultimately lead to its collapse. Collapse, he warns, could have severe consequences for the global economy and could trigger a new financial crisis. To protect against this risk, Kiyosaki advises investors to consider alternative investments, such as gold, silver, and Bitcoin. These assets, he argues, have historically been effective at protecting wealth during times of economic uncertainty. Gold and silver are tangible assets that have been used as a store of value for centuries, while Bitcoin represents a new type of digital currency that is not subject to the same inflationary pressures as fiat currencies. Kiyosaki's views on alternative investments are not without controversy. Some experts argue that gold and silver are not always effective at protecting wealth, as their prices can be volatile and are subject to market fluctuations. Additionally, Bitcoin has also been subject to significant volatility, with its price soaring and crashing in recent years. Despite these criticisms, Kiyosaki's warnings about the potential collapse of the dollar have gained traction among some investors. Many are looking to diversify their portfolios and reduce their exposure to fiat currencies and the traditional financial system. Alternative investments, such as precious metals and cryptocurrencies, have emerged as popular options for these investors. Kiyosaki's advice on investing in commodities like cattle, stocks, and bonds is also worth considering. He believes that these investments can be effective at hedging against inflation and economic uncertainty. Cattle, for example, can be a good investment because their value tends to rise during times of inflation. Similarly, stocks and bonds can provide income and growth opportunities that are not available with other types of investments. Robert Kiyosaki's warning about the potential impact of baby boomer retirement on 401k plans is a topic that is often overlooked. In financial discussions, as millions of baby boomers reach retirement age and begin to withdraw funds from their 401k plans, there is a growing concern that this could lead to a decline in the value of these plans and ultimately trigger a new financial crisis. Kiyosaki advises investors to consider alternative retirement plans, such as self-directed IRAs, to mitigate this risk. Unlike traditional 401k plans, self-directed IRAs allow investors to invest in a broader range of assets, including real estate, precious metals, and cryptocurrencies. This increased flexibility provides investors with greater control over their retirement portfolios and can help them to reduce their exposure to market fluctuations. The baby boomer generation is the largest in history, with approximately 76 million people born between 1946 and 1964. As this generation reaches retirement age, there will be a significant increase in the number of people withdrawing money from their 401k plans. According to the investment company Institute, the total assets held in 401k plans were $6.2 trillion in 2020, with over 100 million Americans participating in these plans. With such a large number of people relying on 401k plans for their retirement, any significant decline in the value of these plans could have a widespread impact on the economy. Kiyosaki's warning is not unfounded. In 2008, the financial crisis was triggered, in part, by the collapse of the housing market, which had a significant impact on the value of retirement plans. Many people lost a significant portion of their retirement savings, and the economy was pushed into a deep recession. To avoid a similar situation, Kiyosaki advocates for alternative retirement plans, such as self-directed IRAs. These plans offer investors a wider range of investment options, including assets that are not typically available in traditional 401k plans. Estate, precious metals, and cryptocurrencies are just a few examples of assets that can be held in self-directed IRAs. Real estate is a popular option for self-directed IRAs because it offers investors the potential for both income and appreciation. Rental income can provide a steady stream of cash flow, while property values can increase over time. Precious metals, such as gold and silver, are another popular choice for self-directed IRAs because they have historically been a safe haven asset during times of economic uncertainty. Cryptocurrencies are a newer asset class that is gaining popularity among investors. Bitcoin, the most well-known cryptocurrency, has seen tremendous growth over the past few years, with its value increasing from less than $1 in 2009 to over $60,000 in 2021. While the volatility of cryptocurrencies can make them a risky investment, some investors see them as a hedge against inflation and a way to diversify their portfolios. By diversifying their retirement portfolios with alternative investments, investors can reduce their exposure to market fluctuations and potentially protect their wealth over the long term. However, it is important to note that self-directed IRAs come with their own set of risks and limitations. Investors should thoroughly research the investment options available to them and carefully consider their own risk tolerance and investment goals before making any decisions. According to Kiyosaki, the United States is moving away from energy independence and towards a reliance on foreign oil. This shift has been driven by Biden's policies, which have focused on promoting renewable energy sources like wind and solar power. While these initiatives are noble in their intent, Kiyosaki believes they are misguided and will ultimately harm the U.S. economy. Kiyosaki argues that the United States has a vast supply of domestic energy resources, including oil and natural gas. By developing these resources, the U.S. could achieve energy independence, reduce its reliance on foreign oil, and create jobs and economic growth. However, Biden's policies are stifling the development of these resources and are instead promoting renewable energy sources that are more expensive and less reliable. The consequence of this shift towards renewable energy sources, according to Kiyosaki, is an increase in the price of energy. This increase is being felt throughout the economy and is contributing to inflation. Higher energy prices mean that businesses have to spend more money on transportation and other energy-related costs, which drives up the price of goods and services. This, in turn, reduces consumers' purchasing power and ultimately harms the economy. Kiyosaki believes that investors need to be aware of the impact of government policies on the economy and adjust their investment strategies accordingly. He advises investors to look for opportunities in sectors that are likely to benefit from the current economic conditions. For example, he recommends investing in gold, silver, and Bitcoin as a hedge against inflation. Kiyosaki also advises investors to be cautious when investing in stocks and bonds, as these assets are vulnerable to market fluctuations and government policies. Instead, he recommends investing in alternative assets like real estate, which can provide a reliable source of income and can appreciate in value over time. In conclusion, Robert Kiyosaki's insights on the global economy, alternative investments, and government policies are both valuable and informative. As a renowned entrepreneur, educator, and investor, Kiyosaki has challenged and transformed the way millions of people worldwide think about money. His perspectives on the current state of the world's economy and the importance of financial education are particularly important in today's volatile economic climate. Investors would do well to pay attention to his advice and adjust their investment strategies accordingly. So, that's it for today's video. Tell us in the comments if you believe this has actual potential, and if you found this information useful, don't forget to subscribe to our channel and hit the like button. Thank you for watching, and we'll see you in the next video.